Um, Ben, hold on 1 second.
We are live, please.
Okay.
Hi guys, hi everybody. Sorry we are coming in a bit behind schedule. We're just fixing up some technical issues. We'll give everybody a few minutes to join in, and then we would commence. Today I have with me two interesting persons who are excited to be on the call today to share some of their experiences around crypto trading and particularly futures trading, right?
Yep.
On this particular call, we would be talking on how to trade Binance futures for the very beginners, right? So if this is like your first time or you are very new to the system, you are on the right call. So once again, welcome, and let's give everybody like 2-3 minutes to join us, and then we'll get started. But by way of introduction, my name is Ben, and I work with Binance at the Africa level I work as a community lead at Binance Africa. And with me on the show is Amek. Amek is a crypto influencer and is a passionate enthusiast. We also have coming up Marvelous. Hopefully, he fixes some audio issues. Marvelous will be joining us much later on the show. All right, so let's head straight into it in just about a few seconds. Okay, Amek, do you want to say a few things about yourself before we
Yeah.
get started?
Seems like you're breaking up. Is it from my end or your end?
Yeah, can you hear me now? Can you hear me now?
Hello, Ben.
Yeah, I can hear you.
Yeah. I think. Sorry, I'm going to run a fast internet test.
Okay.
Uh,
I can hear you. Can you hear me?
I can hear you. I just want to check if my internet is up to speed. Okay. Yeah, I think it's cool.
All right.
Okay. Yeah, so introduction about myself, right? So, my name is Amek. I am a content creator for Binance. I create content from time to time for Binance, specifically content that have to do with futures. I'm going to be dropping a link after this session, right? I'm going to be dropping a link with you guys about some videos I have made for Binance that will tell you much more about futures. That's apart from what we are going to be discussing here today. I'm also an Ego Knight. I've been in the blockchain for quite a while now, and I'm really excited to share my knowledge and experiences with you guys today.
Yeah, cool, cool. Good to have you, Amek. Once again, Amek is not a first timer on the show. He's actually, I think, a second timer.
Yeah.
Good to have you. Marvelous, can you hear us now?
Now I think Latsan. I thought I saw Latsan there for a second.
Yeah, so we'll get started in a bit, but please do not share this StreamYard link. We would share the link to YouTube very shortly.
Okay.
So you guys can join us from YouTube directly. The link to YouTube very shortly.
Okay.
So, all right. So let's get started with what we have today. We have a few outline that we've looked at that would really, help all our listeners today to learn a little about Binance and futures trading, right? So we'll
Yep.
start off with a few, like kind of like the theory before we go down to the practicals, right? So Amek, we want to start off with the question: what is futures trading? In your own terms, can you explain to us what futures trading means
Uh,
and how you engage with futures trading?
yeah. So before I talk about futures trading, I would like to start from the very background, right? So we have the blockchain, right, which was the technology created by Satoshi Nakamoto to host Bitcoin, which was the first cryptocurrency that ever existed on the blockchain, right? So we have the blockchain and we have cryptocurrencies, which are underlying assets on the blockchain, right? So you must be thinking, I mean, where are you going to trade cryptocurrency assets that exist on the blockchain, right? So that's why we have exchanges. We have centralized exchanges and we have decentralized exchanges, right? So Binance, for example, is the biggest centralized exchange ever in existence in the crypto space, right? So, and we have decentralized exchanges as well, where you can trade cryptocurrencies. But we are talking about Binance here today. So, when you talk about trading, there are also different markets under trading. We have sports trading, we have margin markets, and we also have the futures markets, right? So those are the three major markets. So when you talk about spot markets, it's when you buy an asset and you take advantage of the increase in the price of that asset. For example, you are buying that actual asset. For example, if you buy Bitcoin, if you buy one Bitcoin at $10,000, just an example, and it goes up to $30,000, then your one Bitcoin is now worth $30,000, and you can decide to sell the whole one Bitcoin, or to sell zero point 0.5 Bitcoin and keep zero point 0.5 Bitcoin, or you can even decide to just HODL, you hold on to dear life, right? So you can decide to just hold, right? So that's for spot trading. When you go into margin trading, it's a process where you borrow money from other traders to make trades. So before you make these trades, do ensure that you have done your due diligence and research before making these trades, because for every second that you are borrowing that money from other traders, you are going to be charged a certain fee, right? So per second, per minute, per hour, you name it. So when it comes to futures trading, which is the main point of focus for today, right? So futures trading is actually quite different from sports trading and margin trading. It's similar, but it's quite different. The reason is because in futures trading, you trade with leverage. And what leverage basically means is you trade with borrowed money, right? It's quite similar to margin trading, but the major difference here is you are actually buying a position. You are not buying an asset here. You are buying a position. So a very good example is if you buy a position, for example, if BTC is at 30,000, you can buy a position of BTC at 30,000 and estimate that the price will go to, let's say, $35,000 or $40,000. And when it gets to that position, you can exit your position, right? So in futures generally, there are long and short positions, right? So long positions refers to when you enter a position and you expect the price of that security, or the financial instrument, right? That should be the right word, right? So when you expect the price of a financial instrument to go up, then that means you are going long. And when you expect the price of the financial instrument to go down, then that means you are going short. So another term that you should also be very familiar with is when you are going long, you are buying long, right? And when you are going short, you are selling short, right? So just basic about futures and Binance Futures. That's what futures basically is, and we'll get more into
So,
it as we
so
go on.
basically, what you're saying is futures trading is, like the name implies, predicting the
The market,
price
yeah,
of a, let's say, a cryptocurrency or the market
yeah,
in yeah, you're predicting the future currently,
yeah, exactly.
right? And then if it goes your way, you make profits. If it
If it
goes the
goes
other
the other
way,
way, you make
you make
uh,
losses.
you make loss, and
Okay.
from making losses, you can also make profits. An example is if, for example, you get into a position of BTC at, let's say, $30,000, right? And the price goes down to, let's say, $28,000, right? You would have made loss. But if you don't exit that position, the price can still rally back up to, say, $35,000. And
Yeah, we'll get to that. We'll get to that. We want to
yeah,
start at the basics, right? So,
okay,
Amek, I know you're a professional, you're an expert, and all of that, right? But we want to leave it at the simplest level for this particular course. because we're
I
expecting
get that.
people who are joining us today to be people who do not know anything or know just a
About
little about how to trade, let alone how to trade futures trading, right? So, so we've established the fact that futures trading has to do with predicting the direction of the market in the future, but doing that now and hoping that it plays along, right?
yep.
Okay, so I'll look at Marvelous. I don't know if you can test your mic now. Is it good?
Can you guys hear me?
Oh,
Okay.
perfect. We can hear you now. We can hear you. So
Okay.
you can also try and share your screen, and then
Okay,
I
yeah,
will
I'm trying to do that.
add it when we are ready. So, Marvelous, talk to us about futures trading. What do you think, in layman terms, futures trading actually means?
Okay, so since you guys can hear me now, I'm actually
We
glad
cannot see
about
you.
that. I know you can't see me, it's on purpose.
Okay, cool.
Anyway, so what futures is basically, can you guys hear me?
Yes, we can. Go ahead.
Okay, so imagine you from your technical analysis or from your fundamental analysis, kind of analysis you do, you know that the price of rice is going to get rice 5,000 naira, and you know that the price of rice is going to get to 50,000 naira. So what you do is you go to probably the government or any huge supplier of rice, and then you borrow 100 bags of rice on credit from the rice seller. Correct? You borrow 100 bags of rice for him at 25,000. You're promising him that you're going to bring back this rice at 25,000 naira each. That is, you're going to repay him the price of the price of the rice at 25,000 for those 100 bags, which means you're going that's you're buying the total at around 2.5 million if I'm not mistaken, right? Now you already from your fundamentals, you've known that rice is going to get $50,000. So what you do is you borrow that rice and hold the rice. When you get to $50,000, you sell the rice at $50,000 at 50,000 naira. Sorry, which is about 5 million naira. Then you collect the extra 2.5 million on it as your own. And then you go back and pay this guy that supplied you rice 2.5 million naira for the 100. That's the basis of margin trading or future trading. That's the idea. That's the layman idea. That was what was happening till we came into this modern way of Binance and the rest of them. So what we do actually,
Mm-hmm.
those tokens, because when you see someone using 20x leverage, your Bitcoin, you can't afford one Bitcoin. One Bitcoin is 30 something $1,000 today. If you're longing BTC at 10x leverage and a position of one Bitcoin at 10x leverage, it means you're putting $3,000 down, right? Borrowing
Mm-hmm.
with borrowing with a 10x position, you're entering a position that normally you can't trade on your own. The organization
All
you
right.
borrow from them, trade it, hoping to make some profit on it, and then come back at the same price you borrowed. Idea. But in the modern term of it, what you're doing is you're entering a trade amount that you don't normally have, left on the fact that you're going to go up or down, but you're going to put some money down. You're going to put some money down. That's your margin. So that money you put down now is a collateral to them. Holding it is like you borrow money from the bank. They're going to hold that for you. They give you back whatever it you put as collateral, and you take back your profits. They take both your collateral and everything that's there. So that's when you hear someone get liquidated or you run at a loss. So that's basically futures trading.
You're already going to liquidation. We are still at futures trading. Marvelous. Calm down. Calm down. All right. Thank you so much, Marvelous and Amek, for those for the explanation and then for the illustration. All right. So the basics here is you basically need to have a Binance account to trade futures on Binance, to predict the direction of the market on Binance, and then you need to then have a Binance Futures account. So do you want to walk us through how to set up a Binance Futures account, Amek?
Okay, so can you see my screen right now?
Yes, we can see your screen.
Awesome. So if you want to set up a Binance Futures account, it's quite very, very simple, right? There are different ways to go about it. So you can easily go to markets. When you go to markets, you can see the futures market here, right? So when you click on, there's another way to go about it, but this is just one way. But anyway, so when you go to futures markets, you can see USDT, USD M futures and Coin M futures, right? So basically, what this USD M futures and Coin M futures signify stand for is when you are trading in USD M futures, the base currency is USD, right? And when you are trading in Coin M futures, the base currency that is going to be used is basically coins, not USDT, right? So if, for example, you try to trade on the Binance Futures platform for the very first time, once you click a pair, it's going to bring a pop-up. I already trade on Binance Futures, which is why that pop-up didn't show up. But it's going to tell you that it's going to tell you the risk attached to trading Binance Futures, and you are going to read through all the terms and conditions, and you are going to enable that. That's the first way. The second way is by going to your wallet. You go to your wallet, for example, and you go to futures. So if you go to futures, the pop-up is also going to come up, and you are going to accept it, and basically you have set up your Binance futures account. It's not really difficult at all.
Yeah, let me add something to that, Amek. Thank you so much.
Yeah.
When you want to trade very volatile assets, one thing Binance has done is that we have put in pre-trading courses for anyone who wants to trade, and that means you must actually go through the course. Currently, that's like an update, Amek. You must go through the training course on how to trade features before you are even allowed to trade on the platform. It's kind of like a fail-safe process for new users who do not know and want to dive into trading, right? So it's kind of like one of those things that we do for our users to make sure that your funds are safe, whether or not you like it, right? So you need to pass that course before you can get into the futures trading platform. Anyways,
Uh, Ben, so what if a user fails the course? Would they be able to take the course again, or they won't be able to
so
trade
what
future?
happens is if you take the course and you fail a question, the system will show you the correct answer to the question. And
Okay.
then when you have to read through and then accept that you now understand before you can make progress, right? So you don't
Yes.
have to take it again, but definitely you will see the correct answers to
Answer to the
all of the
question.
questions. Yeah, yeah.
Awesome. Awesome.
Marvelous. Are you able to share your screen where you are? If no, we can proceed to the next question.
I think I can share my screen. Let me.
Yeah, because you'll
Uh,
be explaining something in the next phase. You'll be explaining one or two things, right? So if you can share your screen, just let me know. I'll add it to the stage.
okay, can you see this?
Okay, we can see your screen. So yeah, cool, cool. I'll get to that. So we are all good to go. The next question, guys, is how to fund your Binance Futures account, right?
Uh,
I think I'll allow Marvelous touch this one. Marvelous,
okay.
keep your screen shared. I'll bring you up and take you off when I want to.
Ben, I don't know if it's just me, but I can't see his screen. I don't know.
Yeah, yeah, yeah. I saw it. Don't worry.
I turned it off. I turned it off.
All right. So can
Okay.
you see screen now?
Yeah, I can. I can.
So Marvelous, walk us through how to fund your futures account. And let's see how whether our users will be able to learn that one very quickly.
Okay. Okay. So this account is an account I just use for classes like this. So basically, this I'm using the Binance app on my laptop. So this is my Binance app on my laptop. So the first thing, if you want to fund your futures account, make sure you have some USDT on your sports wallet. And
Mm-hmm.
I'm not going to teach you how to put USDT on your spot wallet, but I think most of us should know that already. So if you
Mm-hmm.
have some USDT on your spot wallet, Amek has already told us about the coin futures and the USDT futures. So I will focus on the USDT futures. But it's the same. Okay, let me just go. So basically, you go to your wallet, and then you click on futures, right? So here is it's still buffering. Give it some time. Okay, so this is my futures wallet, right? And I put about $38 in it. So if I want to fund my account now, what I'm going to do is I'll choose first of all which account I want to fund, if it's the USD futures or the coin futures. If I want to fund my coin futures, I'll just click on it, then I'll click on transfer, right? I'll click on transfer from spot. You're transferring from spot wallet to your futures wallet, as you can see here. Then you choose which particular coin you want to transfer. Like for the coin futures, you can trade Bitcoin, Cardano, Link, Doge, Ethereum, BNB, TRX, and all this you see here. So if you have this in your spot wallet and you want to use it to trade coin futures, you can just transfer any of this you have. Let's say I want to transfer Stellar, and I want to put the amount of Stellar I want to transfer. Probably I have 10 Stellar, I want to transfer one, or whatever it is, any amount I want to transfer. I choose, or I can come here also choose 50%, 100%, and then I click on confirm. But I obviously don't have Stellar, so I can't transfer. Now let's go back. Assuming I want to transfer the one I do normally, I want to make it. I want to use my USDT futures. I'll still come back here and click on transfer. I'm transferring from my spot wallet to my USDT futures. So the coin obviously is USDT, right? Even though you can use BNB and USD, but then I just recommend use USDT for here. So you click on how much you want to transfer. Okay. So probably I don't have any USDT in this wallet. I told you guys. But if I have, let's say I have $100, I want to transfer 50. I put how much I want to put, and then I click on confirm. But for the sake of example, let me show you. Right here, I have $38 in my futures wallet. So I've switched it now. I click on this double arrow here to switch it. Now I'm transferring from my USD futures wallet to my spot wallet, right? So I've clicked on my available amount, or let's say I click on 100%. Even if I click on 50, and it
Hold on, Marvelous.
puts
Hold on,
the balance half into my. Yeah.
hold on. I think your earpiece is too close to your mouth, or there's some glitches in your sound. Do you want to maybe adjust a bit so that we hear you clearly? And then just take it slowly. I think you're fast. You're fast.
Okay. I'm sorry about that. Can you hear me clearly now?
Yeah, I think it's better
Yeah,
now.
we can hear you. Yeah.
Okay. I'm sorry.
So go ahead
All
from
right.
the
So
transfer.
okay. So I want to transfer. I don't have any USDT in my spot wallet, so I will transfer from my futures to my spot, and then show you also how to transfer from spot to futures. So I had some money, about $38 in my futures USDT wallet. So what I did was I clicked on this double arrow right here. Normally, when you open this, let me show you. When you click on transfer, the first interface it shows you is to transfer from your spot wallet to your USDT wallet, your USDT futures wallet. But I don't have any USDT in my spot wallet. So what I'm going to do is go back and transfer from I click on the double arrow. It takes me now from USDT futures wallet to spot wallet rather. And I have on my futures wallet, I have about $38. So let me show you. If I click on 50%, now I can transfer half of my lot size here, my portfolio size here, or I can decide to transfer only 10. You just put in any amount to transfer. It's your decision. You can click on 25%, it shows you 25% of it. You can click on 100%, it shows you 100% of it. So I'm going to let me just click on 5%. Right, so I click on confirm, and that's it. I've transferred that amount out of my futures wallet to my spot wallet. So you see here now the balance I have in my futures wallet is about $9.5. And if I go back to my spot wallet, I'm going to be seeing that balance there. Just hold on. Let's go back so I can show you. Give it a second in buffering. Okay, so this is my spot wallet. Okay, so I think you can see. Just give it a second. My network is disturbing. Anyway, let's just go back to the futures. Let me see if I can go back to the futures wallet. So the point I'm trying to make is you can transfer to or from your futures wallet to your spot. It's still the same way. If you're conversant with the Binance interface, it's really, this won't sound really to you. So now that money is in my spot wallet, I can transfer it back to my futures wallet. Look at the $28 I transferred from my futures to my spot wallet. Now I'm transferring from my spot wallet. I'm transferring the same money from my spot wallet to my USDT future. So that's how to fund your account. So now I just click on everything, click on 100%, right? So it's going to transfer this USDT here, is sending it back to my futures wallet. Now I have some balance in my futures wallet. I want to trade it as you can see that's come. So
All
after doing
right.
this, I can now go, yeah. Okay,
Yeah.
should I stop here?
Yes,
Okay.
I think that's enough for how to move between your futures wallet and your sports wallet. So let me add to that, guys. So on Binance, we have different wallets for different functions. Your sports wallet is to hold your crypto assets, and then you see profits. You see profits on that account on your spot wallet if you are just holding assets, right? And then your futures account is to trade futures. We have a wallet for specifically for trading futures. So if you make profits on that account, you are able to keep track of it, right? We have the same function also for margin traders, and we have the same thing for P2P, right? So we kind of like make it decentralized, or we kind of like segment all of the wallets into different categories to make your trading as easy as possible. So what Marvelous was saying is, for you to be able to trade on futures trading, you have to first move money from your savings wallet, your spot wallet, USDT, or the coins, depending on the market you want to trade on. We recommend USDT. You move money, you move USDT from your spot wallet to your futures account, and then trade on the amount you have moved. So you don't have to trade with all of your entire portfolio, right? Okay, so let's look at a little bit of the futures, the Binance Futures trade interface, right? I want Amek and Marvelous to split this into two. So Amek, you take the first set of, you take the first guide and just show us around how the interface works for Binance Futures. Show us some things that we should look out for, and then let's see how that goes, and then Marvelous will take it up from there. All right, so
Awesome.
we can see your screen.
Can you see my screen now?
Yes, go ahead.
Okay. So, like I illustrated earlier, if you want to navigate to futures, you go from markets to futures markets, and you select either USD futures or Coin M futures, right? So, there are different financial instruments that you can trade when it comes to USDM futures, just like Coin M futures, right? We have BTC to USDT, AXS to USDT, Ethereum, Sand, and the rest. You will notice that all these assets, all these financial instruments, I mean, are paired against USDT because it's USDM futures that we are trading right here. So let's use BTC to USDT perpetual contract for as an example. So this is the Binance trading interface, right? So, and when you go to the Binance trading interface, it basically contains a lot of options. It basically contains, if you want to check the USDM futures, the CoinM futures, grid trading, the battle information, like it basically contains everything about trading futures in general, right? So you can see the financial instrument you are trading here. You can change it to another financial instrument right here, right? You can see the mark price right here. I think this is another topic, but well, the mark price is the current price of a certain financial instrument, like the current price. So the mark price right now is 33,730, but it changes almost every second, right? So you can see, okay, sorry, you can see the chart here. This is the chart that records the, the record of the price action, right? So you might be wondering what these candles are. So each candle represents the price action in a specific time frame. For example, if you look here, you can see the time frame here. This represents the time frame, right? So it's currently on the 1 day time frame. So which means every single candle represents what happened in a day, right? So if you select the 4 hour time frame, for example, it means every single candle represents the price action of BTC, right, in the last 4 hours, right? So that's what the time frame means. You can also have access to a whole lot of trading tools through the chart here. You can view the chart and decide your entry points, your support and resistance, and all stuffs like that, right? So moving away from that, you can also see the order book right here. So the order book contains the buy and sell orders, not buy and sell orders basically, but it contains the orders of those that are buying long and are selling short, right? So this red in general refers to the orders of those that are selling short, and the green refers to the orders of those that are buying long, right? So that's the basics about that. Then when you come here, you can see we have margin modes. Ben, can I talk about this?
Can you hear me?
Yeah, I said, can I talk about this? The modes.
Yeah, okay. So talk about it and maybe talk about the modes, and then Marvelous will take from leverage to the end of that
Okay.
particular question.
So there are also modes when you are trading in Binance Futures. So we have cross margin modes and isolated margin modes, right? So what cross margin modes refers to is if, for example, if you have 5 positions, if you are using the cross margin mode, then all those positions are going to depend on a singular margin balance, right? So, but if you are using an isolated margin mode, then all your positions are going to depend on separate or independent margin balances, right? So I don't know, it depends on which type of mode you prefer using, right? So but in cross margin mode, you have to be very, very careful, because if you open, let's say, 3 positions, then all those positions would depend on just your one margin balance, and the more your trades go against you, the more risk you are exposed to. Maybe Marvelous can take over now.
Sure, sure. Thank you so much. Thank you so much, Amek. I'm Marvelous. I'm sharing your screen.
All right. Can you hear me?
Yeah, we can hear you.
Okay, so I'm supposed to talk about leverage, correct?
Yeah, talk about leverage and every other thing below by your right hand side of your screen.
Okay, okay. So basically, leverage is. I'm looking for the simplest way to explain it. Leverage is basically your greed, right? At what greed do you want to borrow this money? I talked about borrowing rice to sell at a higher price. The opposite of that is
Maybe
shorting.
use a simpler term for newbies.
Okay, yeah, say something.
Yeah, yeah. Go ahead. Go ahead. He's saying just make it simpler.
Go ahead, let me hear.
Can you hear
Okay,
us?
let me go on. Let me go on. Let me go on.
Mm.
So basically, I talked about um longing rice, like buying rice at a cheap price, hoping that or believing that it's going to go, the price is going to go higher, then you sell at a higher price, and then come back and pay the same amount that it was when you borrowed it. The same thing can happen when you're shorting. Shorting is, oh, you feel this price is too expensive, that it's going to go down, right? So you buy this rice and sell it off immediately. Like you borrow the rice. Can you guys hear me?
Yeah, we can hear you.
Okay. So you borrow that rice from the supplier, maybe 100 bags or whatever, and sell it off immediately at 25,000. Meanwhile, you know from your analysis that rice is going back to 15,000 naira. So you sell that rice at 25,000, then go down and wait for it. Once the price comes down, you use in fact the money you generated, buy back 100,000, 100 units of rice, and go and give back to your supplier. That's the difference between longing and shorting. Now, when we come to Binance Futures trading, we're talking about leverage. So leverage basically is how much, as regards your margin, as regards your margin, how much risk, how much profit would explain it to you guys. Um, okay, so I have $100, for example. I have $100, and normally one bit I can't afford one Bitcoin. Doesn't matter the leverage I use, unless I use like 1,000x leverage, which is not available. Right? If I have $300, I'll have to use 100x leverage for me to 100. Yes, that should be 100x leverage or 100 and something x leverage for me to be able to long or short one Bitcoin. I hope I'm making sense. This is what I mean. If I have 300, if I want to open a position, not your entire portfolio. If I want to open a position, that's if I want to use something, my margin, like if I want my margin to be $300, but I want to be able to trade one whole Bitcoin on futures, it means I have to be using a leverage of 100x and above. Because now when you multiply 100 times 300, that will give you about $30,000, which is the average price of BTC right now, about $33,000, right? So when you use that kind of leverage, now when you long or short, it's assumed that you're longing or shorting one Bitcoin. That's your position size. While your margin is $300. You understand? Now that's that, but using that kind of leverage is actually greedy. I'm going to say this is actually greedy because that's going to any little move in BTC. If BTC moves from that 33.7 where it is now, maybe you long it, you're thinking to go to 50K, you long it because of the amount of leverage you have, because your what they call your portfolio rather can't contain such amount. What you have cannot hedge the fluctuations. What you have cannot hedge the fluctuations of the Bitcoin price at that point. If BTC loses $200 from its price, like if it moves from 3.7 to 3.5, your portfolio is gone. If it loses $200 or $300 from its price, your portfolio, you're going to get liquidated. Because now, when it loses that price, it's assumed that you're longing one Bitcoin. And if you're longing one Bitcoin and BTC loses $300 from its price, it means your whole money is gone. I don't know if you can understand what I'm saying.
Yeah, so marvelous.
Yeah.
I have a question, a follow-up question to that, because that's kind of like the next question after this, right? So what you're saying is leverage has a role to play in your profit or loss margin, right? Because
yes,
if you adjust it wrongly, you could see yourself on the wrong side of the market. And then if you adjust it rightly, you could actually make some profits over time. So just show us how to adjust our leverage, show us where to go to, and then show us what is the best leverage to use per time, and give us the reasons why you think that should be the case.
Okay, thank you. So there are two kinds of leverages to use. If you come here, click on cross, you see there's cross, there's isolated. Now, what cross means, I'm going to explain this in a very layman term. Imagine you have 150,000 naira in your bank account, right? Imagine this: you have 50,000 naira in your bank account, and you're stepping out to go and buy something, and you have out of your 50,000 naira, you have 5,000 naira cash. Listen carefully. You have 5,000 naira cash with you, and you have 45,000 naira in the bank, where you have your ATM card that can control that. With your ATM card, you can take money from your bank from that 45,000 naira that's in the bank. But in total, you have 50,000 naira. So assume this now: in the 50,000 naira is your portfolio balance. That's the whole amount in the closed wallet.
Mm-hmm.
Now, the 5,000 naira you're going out with to buy something is your margin, right? I'm explaining leverage now. I'm explaining cross leverage now. Your 5,000 naira you're going out with is your margin. That's the amount of money you're in the place you trade. But along the line, while you're going, you saw shawarma, you saw rice, you saw things you want to buy, and then the amount of money, the 5,000 naira cannot account for everything. So maybe everything now comes up to 10,000 naira instead of 5,000 naira. You quickly bring out your ATM card and give the guys to take money from your account. So this explanation I give you is cross leverage. It means that when you place a trade with your margin, that 5,000 naira, and the trade is at a loss, you're making a loss. The computer or Binance, the organizer, whatever, can dip money into your portfolio, the remaining money in your portfolio, to account for the losses you're making. Am I making sense?
Yeah,
so that you can stay in that trade.
Yes, so that trade can go on, because without the extra money, you can't buy all these things you're buying. Like when you go out now with the 5,000, you can't buy the shawarma, you can't buy the shoes, you can't buy the rice, you can't buy everything you're buying, because the 5,000 cannot account for everything. But when you're using isolated trade, it means you leave your ATM card at home. You're going out with just your 5,000 naira. You're going out with only your margin, and whatever happens, you're not spending more than that 5,000 naira. When you go to the shop and they tell you, your bill is more than 5,000 naira, tell them remove it. Give me only stuff that are worth the 5,000. I'm not willing to pay any other thing. So when you're using isolated margin, it means that once you lose 100% of your margin in a trade, the trade closes automatically. They can't dip hands back into your portfolio. If you have $100 in your portfolio and you open a trade with $10, and then you're in 100% loss, that trade gets closed. You get liquidated from that trade, but your $90 is still in your portfolio. Nothing happens to your $90. Is this clear? The two isolated and cross. Did I explain that well?
Yeah. So let me add to that. Let me add to that, Marvelous. Right. So what Marvelous is saying, I know Marvelous likes to use descriptive analysis. He likes to describe it so that you see the you perceive the illustration and understand it, right? So what he's saying is, when you click on cross, you are basically opening all of your futures, all of the money in your futures account to be used to trade, to bet or to trade, right? To hedge on your trade, right? So, but if you use isolated, it means you are just like the name implies.
Isolated, yes.
You are picking just a portion of your entire futures portfolio to place on that trade, right? I think that's like the summary of what Marvelous was saying. So, in this case, Marvelous, which of them is the best to use, and then why do you think that is the best? I think I should ask that to Amek first. Amek, which is the best to use, and in what situation should we use any of these two?
Well, looking at it, the thing is, there are different scenarios in life, right? So both modes are okay to use, right? So, but for me, I would prefer cross margin mode because it gives you more opportunity to remain in trades than isolated. That once you are supposed to get liquidated, I mean, you just get liquidated straight up. Like, I don't know if you get my point.
That's to say, it's easier to get liquidated using the isolated margin, but it is safer just in case you want to the majority of the funds.
Yeah. So the thing about Binance Futures is it's very, very interesting. But my opinion about it is you really need to know what you are doing, right? You just really need to know what you are doing. For example, if you have $600 in your account, right, and you are using the cross margin mode, and you enter a trade with only $100 out of $600, I mean, you should be pretty comfortable. Like, you shouldn't be at any immediate risk of getting liquidated, especially if you manage your leverage properly, right? Marvelous is probably going to talk about that. Using higher leverage exposes you to higher risk, so don't be greedy.
Sure.
Okay. There's a misconception. There's a misconception about leverage. I'm going to address that. But first of all, let me answer the question of which one is the best. I don't think anyone is the best. It depends on your pattern of trading. It depends on what you want to achieve. It depends on your goal. So you check yourself, what do I want to achieve? The reason I like cross leverage is because it gives me space, like Ahmed said, it gives you room to breathe. You can be in a loss, and after maybe the market comes back, and then you're back in profit after some time, after some hours or days, whatever. But isolated just takes you out of the market, doesn't care. But then on the other hand, isolated is more protective because there are trades that you can't get back from. Imagine someone longing Bitcoin for $64,000 and the person is on course. Now the person is on the you can't get back from that. You understand? Yeah. For if the person is isolated, maybe you have lost the margin and then that's forgotten.
Yeah.
You get?
Yeah.
Now, when it comes to leverage, there's a misconception about leverage. When it comes, I have a course on risk management. I taught extensively on risk management futures trading. Now, before you place any trade, you have to understand and know your entry point and your stop loss, your exit, and all that. When you have your stop loss printed, assuming, let me show this. Assuming now I'm entering this trade here, and I have my stop loss at that's around 28,000, and I open a position from here, hoping that BTC is going back to 60K. Correct. So my target is 60K. My stop loss is 28,000. Right? And then what I have to do now is calculate the risk point, the percentage difference from my entry point, which is 33,700, to my stop loss. if the percentage difference, if the potential loss there is less than 5%, it means that if I open any position, I have like this. Ahmed said, maybe I have a 600. No, let me use $1,000. I have a $1,000 account, and I open a position of $100 without leverage. Listen, I open a position of $100 without leverage. It means that if trade hits my stop loss, I'm losing 5% of my margin, right? So 5% of my margin of $100 is just $5, which is still like nothing. There's no, if I lose it, it doesn't affect. It doesn't really make any difference to my portfolio because I have a $1,000 portfolio. But when I use 10x leverage on a 5% risk, the risk of hitting stop loss is 5%. If the thing hits my stop loss on at 10x leverage, it means I lose 50% of my margin, which is 5% risk times 10x leverage. I hit 50% of my margin, and then I lose $50. Now, if I lose $50 out of the $100, out of my margin, it looks big, it's $50. But if you compare it to your whole portfolio, that's for those. It doesn't really matter if you're using cross or not, because this is risk management. This is full-blown risk management. Now, if you lose that $50, it means you're losing 5% of your entire portfolio. It's 5% of your margin, but it's 5% of your entire portfolio. I hope you understand this.
Yeah.
Now, if you lose this, if you lose, experts say don't risk. They didn't say don't use. Now, depending on your stop loss and your entry, depending on the percentage difference from your stop loss and your entry, that will determine the leverage you use. I'm giving you trade secrets. These are things I taught in my course. I'm bringing it out here because of Binance. This is a trade secret. Now, if you're using your leverage, the leverage you use depends solely your risk on your stop loss. You don't use a leverage. You don't choose your leverage before you know your stop loss before you choose your leverage. If my stop loss on my
Marvelous.
entry,
Can you slow down a bit? Like you are going too fast again, I guess.
okay, all right, I get carried away. I'm talking. I love talking
He's a
about.
passionate speaker.
Okay, let me.
Because
Sorry,
I
I said.
am also learning.
Take it easy. Take it easy. These guys actually are very new to futures trading, so take it very easy. Maybe move your cursor around to show us what you mean, and then you can draw the loss
Let me show
calculation.
you. Let me show you something now. Let me show you something. So okay, let me just use. Can you see my screen? What are you seeing?
Yeah, we are
Still the
seeing
What are you
balance.
seeing?
the Binance app.
See the Binance internet. I want
Yeah.
to switch. I want to switch to. I want
I
to
guess you
switch
have to
to.
stop sharing and share a new window.
Yeah. I've stopped sharing. Let me share a new window. I want to show us something. How about now? Can you see this?
Yeah.
Okay.
Yeah. We
So
can see it.
so let's assume that I've done my analysis and I wanted to long Bitcoin from 31,100. So what I'll do is I'll pull up uh, my risk reward calculator. So this is my stop. Let me say I put my stop loss below this candle right here, and I entered at this point, and my target is probably this point, right? So my risk reward ratio, first of all, is, as you can see here, 2.64. It means I'm losing my potential loss if the hit stop loss is 6.42%. My potential profit if the hit take profit is 16.97%, basically 17% profit. All right. So what I was talking about earlier about leverage is this. So with this now, I've decided I know my risk. When I enter the trade, when I want to enter the trade, I know okay, there's a potential loss of 6.40%. In other words, I'll calculate in my head. If I use 20x leverage, it means I'm going to do 20 times 6.42, which is 28.4%. Am I communicating? 20 times 6, 128.4%, if I'm not mistaken, or 124.8%. It means that when I enter this trade with $100 with $100 margin, if the trade hits stop loss, I'm not just going to lose, especially if I'm using a cross leverage. I'm not just going to lose $100. I'm going to lose 120. That's $100 margin. It means I'm going to be losing about $128, right? So what I'll do now, I'll not say, okay, that's it. That's too much loss. So I'll reduce my leverage to 10x, for example. If I push my leverage down to 10x, right, it means that I will now multiply my potential loss here. When you're calculating this, you forget about your capital, your profit, because the profit will only make your emotions high. You feel, oh, if it is profit, the profit will be too much. But you have to first of all calculate your risk before you enter. So 10 times 6.42 is going to be 64.2% of my margin. That's my potential loss. So when I enter this trade with $100, my potential loss is going to be $64.2, right? And if I lose $64.2 out of my entire portfolio of $1,000 is it's about 6%. It's still quite high, guys. The reason why we say it's too high is because if you lose 6% of your portfolio 10 times, and sometimes people open 2-3 trades. Imagine losing 6 or 5% or 60% of a portfolio. You lose because in future trading you make more losses than gains. That's the truth. The only difference is that you're using a very good risk to reward ratio. Imagine making maybe losing 4 trades, entering 10 trades, losing 6 trades at 3% losses, and then making 4 trades at 20% profit. The gains are more as per risk reward ratio. But for the how many times there might be more times you're going to make losses. So in this case, if I'm making this kind of trade, I recommend the person use 5x leverage. Why did I say 5x leverage? 5 times 6.42 is going to be about 30%, I think. That's about 32% loss. That's for 5 times 5x, 32% loss. Now, when you make 32% loss on a $100 trade, on a $100 margin, it means you're losing about $32. So if you lose $32 5 times, it doesn't really, your portfolio will still be standing at least. Because we are looking at the long term of, look, you're in trading, especially futures trading, your capital is your weapon. Once you lose it, you've lost the war. You can't continue, you can't fight, you can't place trades anymore. So you have to protect your capital at all costs. Am I making sense? You have to protect. So when you leverage, if I had a risk, I entered this trade at this point. I entered this trade here. I had a sniper entry, right? I entered this trade here. My stop loss just below this, which is about 2% stop loss. I can use, if I use 40x here, I can use 20x comfortably. I can use 30x, depending on the size of my portfolio. If I use 30x, it means that my potential loss is about 60% of my trade, of my margin, which is about $60.
Mm-hmm.
I can decide that I won't open another trade. I'm just going to open this one. So the potential loss is quite small. $60 out of my $1,000 portfolio. It's not really going to be that much of a big problem. Do you understand?
Yeah, sure,
Yeah.
sure.
We get you.
So that's why I said, okay, go on.
And what I would just like to contribute for the audience, because some people might be newbies and they might really not get this. What Marvelous is trying to tell you guys is you really need to get futures trading knowledge before you actually start trading futures. You need to get technical analysis knowledge, or at least some knowledge of what you are doing. You can't just say you want to start trading and you start trading. You are definitely going to lose money. So try to do some research, learn some techniques before you start trading futures. That's just my advice. And
On that note, guys, I'm going to drop an article from the Binance Academy that shows you a step-by-step guide on how to trade Binance futures, right? What my guys are doing here is kind of like the practical, giving you a quick look at the market and how to even know when to enter. So what Marvelous is doing is he's predicting the market based on all of those horizontal lines, and he's looking at the favorable spot to enter into a long position. A long position means you are predicting that the price of that particular market will go up. And then if it goes up from where you entered, you are making profits, right? But you need to first understand how to, identify an entry point. Right? You need to know how to identify an entry point, and that is where Amex says you need to pay attention to doing your own study on trading itself. Yes, technical analysis. So let me ask one question, Marvelous, because if I allow you, you are going to go on, and you will make profits on our head. So let me ask one question now. Just in very quick, like in 5 seconds, 10 seconds, show us what's the difference between mark price and last price. Like in 5
Okay.
seconds.
Let me show you something. Let me. So look
I'm
at this.
exhausted
This is
your screen. Show us.
okay. Can you
You
hear
saw
me?
the same after Marvelous. Go ahead, Marvelous.
Okay. So this is Bitcoin US dollar index, right? This is
Mm-hmm.
index. This is the Bitcoin US dollar index chart. Mark the price currently at. Okay. Let me just show you this. So this is Bitcoin US dollar index. The price is 33,861. For
Mm-hmm.
BTC USDT futures, perpetual futures, the price is 33,824. This is um this one here is for Bybit perpetual contract, 3,804. So if you look at the three of them here, their prices are not the same.
Yeah.
Can you see that the prices are not the same? The same thing with
Yeah.
different exchanges, OKX, Huobi, KuCoin, and the rest of them. All of them have slight differences on their prices. So for those exchanges at that time, their prices at that time at their last is called the last price. The mark price is more like an average price across all platforms. You understand? So there's
Yeah.
3,800 here, 3,853, there's 3,791, there's 3 whatever on other exchanges, all brought together to get an average. So that's the mark price on the best of my understanding. So that's the mark price. When you hear mark price, that's like because of the arbitrary nature of BTC and the fluctuating nature of BTC, they have to have an average, the mark price at that time. The mark price moves
Mhm.
to as the other last prices move, but they are quite different.
All right. Amek, I'm sharing your screen now. Go to your chat and show us your own illustration. Marvelous, don't turn off your shares. I'll just remove you from stage. Leave the screen,
Of
continue
uh,
sharing.
of the calculator, which one precisely?
Yeah, work on the mark price, and then we'll go to the calculator after that. What's the
Okay.
difference between the mark price and the last price?
So the last price basically is the last price at which a certain instrument traded at, from my own understanding, and
Mhm.
the mark price is the current price. That's from my own understanding. So, for example, this is the
Great.
current price. This is the current price of BTC, right? And that's
Mhm.
the mark price. And the last price is I mean, it should be this one. Yeah, it's this one. The last price at which is certain, what is it called? A certain instrument traded.
Great, great.
That's
Thank you so
yeah.
much. So,
Then
like I said, guys, you will see a lot of these informations we are touching on in the link I dropped earlier on, right? So just check that link, and if you have questions, join our communities to ask your questions, and angels will be on ground to help answer them. So, Amek, go straight to the next question.
the
Um,
calculator.
how to use the Binance Futures Calculator? Very
Okay,
quickly,
so
we can
okay,
wrap up.
I'm just going to okay. So this is the Binance Futures trading interface, and if you go right here, it depends on which platform you're using. On the web version, you can see the calculator right here. I think on phone you have to click a certain three dots somewhere
Mhm.
around here. On that, if you are using the Binance app on your phone, I don't know if they have changed that, but on the web interface, this is the calculator, right? So if you're using the app as well, you are going to see the calculator. So this is profit and loss. So basically, what the futures calculator essentially helps you to do is, it's not 100% accurate, but it gives you an overview of what your trade is going to look like, or it gives you an overview. Especially this is especially for newbies. It kind of guides you to some extent what your trade is going to look like, right? It guides you on which variables you could use to support your trade. For example, if you want to enter a long position, right, and you want to calculate the profit or loss you are going to be making on that trade, right? So, for example, this is your leverage. This, you are not making an actual trade here. You are only illustrating and a trade that you want to take in the future, right? So, for example, you can shift the leverage to, let's say, 5x, right? 5x leverage, right? And you put your entry price at let's say you want to, after you have done your analysis and all that, but let's say your entry price is $33,500 for BTC, right? And your exit price, you are intending to get out of that position at, let's say, when BTC reaches 35,000. This is just a quick overview, right? You can use the calculator in other ways as how you want to use it, right? So, and the quantity, let's say, is let's say 0.005 BTC, right? So if this is the variables for your trade, you can simply calculate, and it's going to show you your margin, which we are going to be using to enter that trade. It's going to show you the profit or loss you are going to be making for that trade and the returns, right? So, but about this profit or loss, right? The reason why it's called profit or loss is it can either go in your favor or, I mean, is it against your favor? I don't know. Like it can either go
Or
your way.
against you. Yeah.
Uh,
It can
yeah,
go your way, I can go the other way.
yeah, or the other way, right? So, for example, what this means is between 33,500 and 35,000, there is basically a $1,500 difference. So, right, so if BTC is to drop down to, let's say, 30, that would be 32,000, 32,000, right? So that's a 1,500 decrease in the price of BTC. You are going to be making a loss of $7.5 as well. But like I said, this calculator is not 100% accurate. It only gives you an overview of what you are about to do, right? So, and it's helpful, especially for newbies. If you don't really know what you are doing, at least you are going to get an insight with the calculator.
So stay on the profit and loss first. Stay on the profit
Okay.
and loss. Right.
Yeah.
So like put those parameters again. I want to ask a question.
Putting them back, right?
Yeah. So the entry price is like saying at 335,
Mhm.
I'm entering a position to go long on
Yeah.
Bitcoin.
Yeah. Yeah. Exactly.
Yeah. And then the quantity is 0.05, right?
Yeah. Yeah.
I
That's
want
correct.
to enter that my position using that 0.05, which is about $33 or so. Is that
Yeah.
correct?
Of BTC. Yeah. Exactly.
Okay. Okay.
Yeah.
Makes a
Then
lot of
the thing is,
sense.
you can also calculate for shorts as well. You can set the parameters any way you want. You can even go all the way to 100x. But I wouldn't advise that. But I mean, that's what the
Okay.
calculator is there for. You can use it to check all that.
Okay, cool. Go ahead.
So you can also use it to calculate the target price. For example, let's say right now I'm using a 10x leverage, right? And I'm going into BTC, let's say at the same 33,500, just an example. And I'm expecting a return on investment of, let's say, 50%, right? A 50% return on, like, I want to make 50% profit, right?
Mhm.
So if I calculate that, it's this section of the calculator is going to tell me what price BTC has to get to for me to make this return. So for example, let's calculate that. So you can see BTC has to get to 35,000, around 35,000 $175 for me to make these returns, right?
Mhm. Mhm.
So I'm just running through this. So
Yeah.
the liquidation price as well. This helps you estimate. This is very, very important. The liquidation price. It helps you estimate at what price you are going to, or at what point in time you are going to be liquidated if you enter a position. And this is very, very important because you have to know that this is not accurate. I'm saying this again because most of the time, if you enter a trade, let's say you enter a trade, okay, I'm just going to illustrate that very briefly. So let's say we are using the same parameters, 0.005, and you have a balance of, let's say, that should be around, let's say, 500 US, let's say $500, right? So basically, if your liquidation price, if you are entering this position, no, this one illustrates what I want to. Okay, let's say it's 100 USDT. Yeah, perfect. So right now, if you are entering a position, using 10 times leverage, your quantity is 0.005 BTC, and you have $100 balance, and you are using the cross margin mode, right? So the thing is, your liquidation price, which is the estimated price BTC is going to get to before you are liquidated right now, is 13,500 and something dollars. But the important thing I want you to note here is, if there is a drastic decrease in the price of BTC, like a drastic decrease, let's say there is we are in the BM, we are in the quite of the bear market right now. So if there's a drastic decrease in the price of BTC from, let's say, 33,000 to, let's say, 27,000, this price is going to change. Even when you enter a trade, let's say you enter an actual trade on the Binance Futures platform, this is going to change. If you are seeing 13,554 as your liquidation price before, it's going to go up. It's going to go up to, let's say, 15,000 or $20,000. So you have to be really, really careful about your liquidation price, and you have to stay away from it as far as possible. Right. So what I'm saying is, don't enter trades with like, if you are entering with as much BTC as 0.005, then you should have enough. You should have enough enough balance in your enough USDT in your account to fund this position, to ensure that you stay in this position. Right. That's why you are using the code. For example, if you have a $500 balance, you'll see that it's either your liquidation price will be much lower than this, or it wouldn't even exist at all. For example, let's calculate that. You can see that your liquidation price is zero, right? So you are kind of not exposing yourself to a whole lot of risk. The more money you have in your balance, the safer you are from getting liquidated. As far as you are entering, if for example, if you are entering with if you also increase your quantity to, let's say, 0.1 BTC, then you are going to be at more risk. But if you are entering with a low quantity, if you are entering, it's just like what Marvelous was saying about risk management. You have to really manage your risk to ensure that you are not exposing yourself to too much risk. Because if you expose yourself to too much risk, that's how you lose all your money. And in case you haven't figured it out yet, what liquidation means is you lose all your money. If you get liquidated, then you are going to be losing all the money in your futures account.
Speaking
Right.
about
So
that, speaking about that,
that's
speaking
so let
about that, liquidation is kind of like they call it love letter from Binance. So the question now is, what percentage is advisable to use, especially if I have, let's take a base of $500. What percentage is advisable to use for leverage, and then how much of my assets should I expose to liquidation?
I guess Marvelous would answer that much better because he will go into the technical aspects.
Marvelous, are you there?
I'm here. Oh, I'm like,
Okay.
can you guys hear me?
Yeah, we can
Sure,
hear you.
sure.
Anyway, this question you asked is seriously is a full course. Like, if I want to take it, I told you guys I have. If I start talking now, Ogabe will say, I'm running, I'm going far, I'm going up, up,
Okay,
up, up.
or should I give a quick
So,
answer?
yeah, just give a quick answer because it's a big
Marvelous is too detailed.
So
it's a big subject.
basically for newbies, what I'm going to advise is you actually play around with this, like you play around with the calculator. For example, if we are to calculate this, let's say using a $500 basically, here's what I'm going to advise for newbies. If you are just starting to trade futures, you are quite very, very new to the market, right? So your leverage shouldn't be anything more than from 1% to from 1 times leverage to 5 times leverage. You have to play safe until you actually understand the market very properly.
Exactly.
Just like
Exactly what I was looking out for. Amek.
just like what Marvelous was saying.
Go ahead. Go ahead.
Um,
Go ahead.
so you have to, in fact, most times I usually recommend using just 1 times leverage to 3 times leverage for total newbies. I mean, you are new to the market, you haven't done this before. even if you have gone through some tutorials, you are trying out some practicals and all that, you are still new to the market, right? So don't
Mhm.
expose yourself to too much risks. And if you haven't figured it out yet, just like what Marvelous was saying, the more leverage you are using to trade, it's like the more times of your money you are using to trade. Because for example, if you have $100 in your account and you are using 5 times leverage, it basically means you are trading with up to 5 times of your capital, right? So if you are going to make losses, you are going to make up to 5 times of loss trading. So like
Yeah, yeah.
trading,
So,
trade,
Amek, I always like practicals, right? I want us to set a trade that will show zero liquidity live on this call. So since you
okay,
don't
okay,
have USDT funded on your account now,
yeah.
I know this is the calculator. Some people might after this call might
Yeah,
get lost with
this
this
if
calculator.
this trade for
Mhm.
example has no liquidation price attached to it.
But
So
you don't have a balance of 500. So what I want
yeah,
Marvelous to do is Marvelous has $38 in his wallet,
okay, so you should
right?
practicalize it.
I want him to show us, Marvelous, you are going to be put on the spot now. So enter a trade that will give
All
you
right.
zero.
Okay, no problem. Let me do that. Let me share my Binance.
Oh, okay. You actually removed yourself.
All
I was already
right.
sharing
Okay.
your screen. So what I want to do is I want people to see that what we are saying is actually practical
Yeah,
and
I
can
get
be
it.
practiced. Yes. So yeah, this I like this interface. Marvelous. Mm.
All right. Thank you. So um, I'm trying to confirm how much is my wallet again, sir.
28
It's
from what I
about
can see.
28.
Yeah, you can enter a trade with that.
No, I should have 38. I don't know why I shouldn't 28.
You transfer
I'm
10, I
going,
think.
I think I transferred it back. 38 is here. All right.
Mm.
So okay, let me long BTC. I'm going to long BTC here. And I'm going to use a very 28. Okay, what's showing here? $28. So you see my position size.
So
So if
what
I
is
push
that
this
scroll
here,
bar you are moving? What is that scroll
it's
bar?
is the amount I want to use to enter the trade. My margin. I'm choosing a margin now. And if as I'm pushing it, look here. It's showing the cost of my trade. Showing the
Mm-hmm.
cost of my trade here. So if I push this to on to everything, means I want to enter with the whole balance. I don't know why it's showing $28, but let's just ignore that. So but if I reduce it, see the cost of my trade is about $2, right?
Mm-hmm.
Okay. Now I'm going to use a very low leverage. Let me use 3x, like Ahmed said. So I'm using a cross leverage of 3x right now.
Mm-hmm.
So I'm going to try and use I'm going to try and use um let me see. I don't know why it's
I think
okay.
the
Let me
minimum
just
you
use
can
let me
use
just
is 0.001 BTC. That's the minimum quantity.
okay. It means that means I won't use BTC. Maybe I'll use another trade, another pair that I can actually
Like I use
enjoy
a
myself
lower,
on.
yeah.
Yes. So let me use TLM. I'm using TLM right now. So at 3x leverage. Okay. Now I can use see I'm using this is 58. My addition is not okay. All right. So I'm using $2.62 out of my
You're not on
38.
20x.
38.
You're not on
20x.
20x
No, no,
level.
no. I'm not supposed to use 20x. Let me use 5x here. Use 5x.
20x is for pro traders.
20x. I explained that you can actually use 20x if your risk is, if you've calculated the whole risk and stuff I told you about. So I'm going to open this
Mm.
trade now. I'm going to choose my price. I've chosen this price. I'm going to open long. Order submitted, order field. Now let's scroll down. Sorry.
That's the order.
This one price. See, my order
Yeah.
is running already. The position is open. 0.17% profit. No
Now,
liquidation price.
now let's take it from here. Now we have successfully opened a trade that is live, and we have no point where we can be kicked out of the market, right?
Yes.
Yeah.
That means if this trade keeps if the market keeps going up, scroll up to the chart. Marvelous. Scroll up to
Sorry.
the candlesticks, the chart. Yeah. It means that wherever we entered from, we expect that the price of TLM keeps going up against the USDT, right?
Yes.
So if it falls at some point, if it falls down to, let's say it falls down a bit, are we going to see that liquidity dash turn to maybe minus? Maybe there will be a price on the liquidity?
No, liquidation. No, there won't be a price. There won't be a price as long as it remains like this. The only time you start seeing a liquidation point is if with this same amount of money in my whole portfolio, this same 38, another another position, maybe another long Bitcoin, long AXS, long. So
Okay,
it
so
means
open multiple trades.
when I open more trades, it means that I'm now allocating little portions of my portfolio to each of them. So that freedom they had
Okay.
before will no longer.
Okay, okay. I guess it's understood now. Guys, if you have questions, you can ask them in the comment section of this call. We are about wrapping up, but we just wanted to do this practical aspect. Make sure that you have an idea of what we talk about and the terms we use, and then the places to click to find yourself in successfully opening a futures trade. So, like the next question is what Marvelous just answered. When are your positions at risk of getting liquidated? Marvelous, do you want to touch on that again?
I
When?
think okay. I
Yeah.
think Ahmed has discussed on it, but your positions are at risk of getting liquidated when you use when you're over leveraged and
Mm-hmm.
you use a too much, you know, like from $100 portfolio, you're using 20x, and then you're using $60 to open a trade.
Mm-hmm.
You're at very big risk, especially if you do not plan your trades, set your stop loss. So those are um, risks that could come upon your trade and all.
Great. Amek, do you want to touch on that too?
There is something I wanted to say, but I don't know. It skipped my mind.
Okay.
Maybe I'm going to talk on that when.
Sure, sure. So we have understood that when you over leverage on your accounts, and then when you use more, when you allocate more than necessary in terms of the amount you have to a particular trade, or when you split your current amount to so many trades, you kind of like put yourself out there, you just kind of like remove all of the shield you have, and you get exposed to liquidation. So if you have a small amount you want to possibly test Binance Futures with, you want to make sure you open not more than two trades per time. And then you want to make sure that your leverage is low and the amount you allocate to those trades are also very low. That's the way to avoid liquidation. Before Amek, have you remembered what you
That,
wanted to say?
that's what I wanted to say. Just the way
Okay.
that before you start trading futures, like for example, myself, I'm using myself as an example, right? So I started with $10, then I moved on to $20. So don't
Mm-hmm.
rush yourself. Just start with small amounts that you can afford to lose, or let me say conveniently afford to lose, not the one
Sure,
that you
sure.
lose. And don't use your rent money to trade on Binance Futures for the very first time. It's a bad idea.
Mm.
You pack out.
Marvelous.
You
I
pass
have
out.
the final question, and I think the final question is something you would love to answer.
What question?
The hedge mode function. How to use hedge mode? Do you want to show us how to use hedge mode?
Okay, I have just about 2 minutes. As you can see, my battery is low,
Oh,
and
oh, oh. Okay. Please run through it.
let me just run through it. So when you go to this preferences, trade preferences right here, it will, if
Mm,
this is So you just check where is this something is wrong. Hold on.
That particular feature is easy to find on the
Yeah,
phone
but
model.
I don't know. I saw it just now.
Hmm. Okay. I think it's even better we don't overlabor the listeners with too much of the technicals, right? I feel that question is something we can push to another session. I
Uh,
just asked because I felt a lot of people want to know, but all of this is covered in our article I just shared. How to the ultimate guide to trading Binance futures on Binance, right? So thank you so much, guys, for your time. I also shared the form where I would love to get your feedback on what other topics we can talk about.
okay. Let me just give me a minute. Let me just say something on that before. I've seen what I was looking for.
Oh,
So,
okay, cool.
so just in 1 minute, this is the preferences. When you click on this button here, it takes you to that
Mhm.
interface. Click on preferences. So you go to position mode. So this is one-way mode and hedge mode. Hedge mode allows you open long and short positions at the same time. Probably a long Bitcoin and Bitcoin starts going against you, and you feel like it's just a little retracement, it's going to go back. So what you do is, let's say I'm long on TLM now,
Mhm.
I'm already losing. So I can decide to short it again. I can decide to open and that's a little short position, right? And just
To make profits in both direction.
short it. Yes, so I'm trading in both directions at the same time. I see entered. Let me see. So I've created my order and the order has been filled. So if you look now, I'm shorting TLM and longing it at the same time. So one is in profit, one is in the loss. So as if I'm making a loss, the one in profit is like hedging me against the loss. So that's what. But most of them can still be in loss at the same time. Oh. Depends on when
Just
you
like
enter. The entry point can make the difference. So
Yeah,
that's basically
yeah.
what hedging is. It's kind of hedging you. Maybe you make a wrong decision, or maybe you enter late, or you enter too early, something like that. So you use the other direction to try and hedge the trade. I hope that makes sense.
Thank you so much. That makes a lot of sense. The first and important thing is how to get there. You see those two parallel lines by the top right. Click on that, and then you see preferences, and then you can select the mode you want to use. So you can use one way or you can hedge. So one way mode only allows you go in one direction, enter a particular pair in one direction, and hedge allows you the option to trade in the opposite directions on the same pair. I think that's fine for today, guys. Yeah,
All right.
because of time and because of your time, we would like to I think that's like the basics for crypto trading, Binance futures trading. We'll take your comments and your questions in our form. We dropped the form. Please give us feedback as to how the class went. What next we can talk about for the next session. We'll have another call like this in 2 weeks. So please give us your feedback in that form so that we can know how best to prepare. Thank you so much, Amek. Thank you so much, Marvelous, for your time. We'll come your way
Welcome.
next time. Thank you so much, and bye. So yeah,
bye guys.
Ahmed, you wanted to drop a
Yeah.
link. Please drop the link
Yeah.
to my WhatsApp, and
Okay.
then I would send it out. Also, drop your Twitter handles so that we can share with the community if they want to get in touch with you. It's easier
Okay.
that way.
Twitter, right?
Yes, Twitter handles, the links, and all of that.
Okay. Okay. No, no
Yeah,
issue.
and guys, join us as much as possible on our Telegram channels. Ask your questions in Telegram. Binance Nigeria, Binance South Africa, Binance Ghana, Binance Uganda. All of those channels are live, and we'll be able to help um, share feedback with you. All right.
Thank you.
Are we good to go?
Uh,
Thank you, guys. Thank you so much. Or Amek, what you do is take this YouTube
I've
live,
sent.
take this YouTube link, and then maybe rebroadcast it on your channel, and then people will follow up from there.
I didn't get that.
Okay, let me see. You sent it.
Yeah, I sent it to you already.
Okay, great, great. Let me quickly push it out there. All right.
And my Twitter handle.
Great. Marvelous. Did you send yours? Or you can just mention it. Just mention it. Oh, mention it on the
My
call.
okay, my Twitter handle.
Yeah.
I think I at IAM underscore BLAUR.
Great. I am the law. I am the law, right? Thank you so much. I
Yes.
am underscore the law. What about you, Amek?
Amek_nation.
Amek underscore nation.
Yeah.
Great. Thank you so much, guys, for your time. Bye.
Okay.
All
Bye.
right.
Bye, guys.